Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe, the Father's Day edition, June the 16th. Obviously, nobody cares about Father's Day as compared to Mother's Day. But starting off with the FTSE 100, you can see that we've got this rising trend channel there. That's been in place since early January, and the floor of the channel there around 81.50. Below the recent support there, 81.10 to 20, looking for a retest of the initial April resistance around 80.50. Given that we've had RSI failures at and below neutral 50 and we're below the 50-day line, probably one would have to factor in the 80.50 area, even if the market then bounces after that. Otherwise, the trigger for a new leg higher would be an end-of-day close back above the 50-day moving average, 81.75. Moving on to the DAX, and here the wheels came off the wagon on Thursday and Friday, and the fear that we would have to test April-May support towards 17,700, 17,800 came true. There was also a triple failure for the RSI in the low 50s, which is almost the worst thing you can see. It's actually even worse than failing at RSI 50 because it gives you a bull trap situation. Below the 50-day line there at 18,300, the risk is obviously of a move towards the April support area, 17,700, etc., etc. Moving on to the Dow, and here the position slightly better in the sense that we have managed to find support near the floor of that rising channel there from back in August. Still want to see an end-of-day close, a proper one above the 50-day moving average of 38,700 to give us a move back to 40,000. The problem here is that, like the DAX, we've had failures at RSI 50, sort of curled under that RSI 50 level, so that does suggest that we've got the risk of 37,600 and the April support area, maybe even the nightmare scenario of heading back down to the 200-day line at 37,000 for the first time since back in November. On to Bitcoin, and here we're still disappointed that the market failed below 72,000. Current situation is that we bounced off the floor of the channel there, 64,800, and hoping for a move back to 72,000. 50-day line is rising, which is actually quite encouraging. That's a decent look there, but the RSI is still below the 50 level at 43, so really probably now safer to wait for an end-of-day close above RSI 50, even if we give away some of the upside there. We can get through 72,000, we've still got the chance of a move to 85 to 90,000 by the end of next month, although obviously every day that goes by makes that scenario less and less likely. Worst case on the downside is we have a follow-on move to the downside, and that March support line projection towards the 200-day moving average of 56,800. And while we're below 72,000, it can't really rule that out. On to gold, and here it's been a case of hoping this market would stay above 2280 and ideally above 2300. It's done the latter. Still waiting for an end-of-day close above the 50-day moving average at 2360 to give us a third test of 2450 and record levels. But probably not looking too bad given that we're just shy of the RSI 50 level as well, and we managed to bounce above the 2280 support. Moving on to the stocks, and starting off with Ananda, which is on the Aquis market and has done rather well over the last few weeks. We're actually looking for this market to bounce off the floor of that broadening triangle from December, and that's exactly what it did. A bit of a bear trap also below the old support there, 0.25. And the view now is that having just about touched our initial target there, 0.4, we're looking for 0.5 as soon as the end of next month, and if we're lucky, by the end of this month. Also half expecting the 50 and 200-day lines to go into a golden cross. In fact, we might be in the run-up to that, so therefore 0.5 looks more nailed on than maybe some are expecting at the moment. Stock that I don't think anybody looks at all is Devolver, and here, beautiful pattern with the rising trend channel base in place since this time last year. Top of the channel there at around the 33 pence level, looking for that before the end of this month. And we've already had the golden cross last month, and also an unfilled gap to the upside off the lows there back in March. So everything looking good here. In fact, one would say that 33 pence is probably the minimum we're looking for here. We're looking for probably the upper parallel of that rising trend channel by the end of next month, which would be the line I'm just drawing at the moment, which is heading towards 46 or 47 pence. So above 25, looking for the mid-40s as a best case there. Eneraqua is next, and here the situation a broadening triangle base. We're just touching the 200-day line now, which we've done for the first time since a long time ago, April last year. So that is a big positive tick. Initial target here now above the 200-day line at 55 pence and then up to as high as 80 pence by the end of next month. So that would be obviously quite a turnaround, but the 50-day line rising nicely, and basically we had a decent sideways shuffle above it, which is typically one of the best leading indicators on recovery and on the upside. Moving on to Europa Metals, and here just the first sign of a turnaround. The situation here basically that we've got an end of day or end of week close back above the old March-April support 1.55, and basically while we're above that, or if we get that, then we're looking for as high as 2.1 pence by the end of next month. The key here is staying above the 50-day line at 1.25 pence. On to Eurasia, where I suppose the bears are still hurting and smarting from that spike from basically the 1.5 pence area to 7 pence plus. That should have brought tears to their eyes, and probably they're still moaning and groaning about how unfair life is. But the current situation is that the initial resistance, if you remember the other week, was around the 2.3 pence level. So above that, still looking for a flick up towards 4 to 4.7 pence. The levels above 2.3, the 3.1 and the 4.7. Worst case scenario, I suppose, is that we have to head back to the 200-day moving average for a sixth time, around 1.95. But maybe we'll get away with the retest of 2.3 and then head higher as we did on Friday. RSI still above neutral 50, which is helpful at 54. So at the moment, maybe worth a punt there on 2.3 pence holding. Next up is Good Energy, and here a decent looking chart after the consolidation that we've had since the beginning of the year. It looks as though we'll get a move up to the top of that rising trend channel from February at around £3.21. Looking for that by the end of next month if we get a quick end of day close above the rising 200-day moving average at 271. It's just shy of that at the moment. We're also backed by an uptrend line in the RSI window, which has been in place since February, so that's pretty good as well. On to Helium 1, where maybe some of us are surprised that the shares have bounced so well off the 0.5 pence placing level. There was the look of that on Thursday and Friday, and we've done it. The view now is that while there's no end-of-day close back below the initial peak, the 0.69 peak, the floor of the gap there, we're looking for a move towards 0.8, 0.9, which is what I suggested during the week, and maybe might even be able to fill that gap up to a penny, because it just sort of looks as though we might repeat on this placing what we had on the previous placing, so which obviously made one or two people rather happy, one would expect. IHC is next, otherwise known as Inspirational Healthcare. Here we've broken out of that falling wedge after the two gaps down as well, so it looks as though it's quite significant. The view at the moment is that above the 50-day moving average at 22 pence, looking to fill the gap up to at least 30 pence and maybe hit 35 pence by the end of next month, or even sooner, which would be quite a turnaround. Incanthera is next, and here one of my stocks of the year, around the 4.5 pence level actually. Initial target there was 15 pence, but we managed to do rather better than that. The current situation is we've broken out of the top of that rising trend channel from back in January, and above the top of that channel at 25 pence, looking for 34 pence perhaps as soon as the end of this month. Kendrick is next, and here you can see that shares have revived themselves after rather, well, I suppose it's a straight move down from listing. So top of the triangle there around 0.73, looking for that by the end of next month, while we remain above the old January support there, 0.44, so above 0.44. Up to 0.74 or so. The next stock is Kibo, where it looks as though James Parsons is looking to finesse his success on other companies in the small cap area with the board seat on Kibo. Here you can see that it looks as though we're in a falling trend channel, and we bounced off the floor of that there at 0.01. Above that, looking for the shares to at least fill the gap up to 0.03. And maybe even up to 0.04 by the end of next month. But as I said, that's a bit of a feeling there. At the moment, one could say it's a failed gap fill and therefore a little bit negative. Moving on to mobile streams, which is also back from the brink, well, at least brink from some people. Here you can see that the shares have started to turn around in a decent way. The reason for that is the sideways shuffle above a now rising 50-day moving average. That, as I said, that is one of the best turnaround recovery signals. That suggests the initial target here is 0.06 at the top of the rising trend channel base from back in January. The only thing that shares need to do is stay above that 50-day line about around 0.04. On to the last few. First one is Oracle Power, which has bought another project, I believe. Here you can see that we've had a rebound off the floor of that broadening triangle from back in the autumn, basically. Current situation is that we're looking at the shares heading back to the top of the broadening triangle, 0.04, and the weekly close above the 50-day line, rather helpful to that cause. Probably just want to see the shares remain above the old April support there, 0.02, as we head potentially to 0.04, but obviously that situation not for widows or orphans given the history of the shares. Renalytix is next, where there was the hint the shares were going to break out of that falling wedge on Friday, and they did it at 18 pence, above 18 pence, looking for the 50-day line at 23 pence initially, and hopefully up towards the 200-day moving average once again, hopefully by the end of next month or even sooner. Ideally, given the history of the shares, it's fully capable of moving just in a few days. So the nice thing there would be to see a spike up to the 200-day line, as we saw back in February and in March. Finishing off with another situation which could be described as a falling knife situation, Service Transforms. Here, the shares actually done quite well, probably better than most expected, with breaking neckline resistance around the 1.6 pence level and bouncing off that last week. The target here to fill the gap up to 2.72 by the end of this month. And ideally we stay above initial June resistance in the upper ones area. That's it for me today. More updates during the week.